All right, today I want to talk about taking concentrated portfolios and preferring that relative to a highly diversified portfolio. And I know this is, you know, a cliche or whatever, but I'm going to quote Warren Buffett, who said in 2008, if you are a professional trader and have confidence, then I would advocate lots of concentration. Uh, and the justification for that was that traders who had lots of concentration could get a significant amount of their returns from just a few securities or stocks that they invested in because they had a higher degree of confidence in those positions. And you compare that to the person who is diversified, let's say amongst 20 or 50 or however many stocks, they're much more likely uh, to underperform their best picks, say their top 3 or top 5 picks that they had the most confidence in, but also they'll have a really hard time outperforming the average of the market where you didn't really have to do anything. You just invested in the index itself. And in this situation, if your aim is to turn dollars into a lot more dollars and outperform the market, which justifies you spending time on the market, then you're going to have a better go with fewer bets that are more concentrated, where the most investments you really have would be like 3 to 5 across whatever asset class that you're interested in, or whatever portfolio you're trying to grow. When you do that, it's going to be much more volatile, which Buffett and Charlie Munger acknowledge in their strategy. And then another thing is this is a lot harder to do when you have a lot of money. However, almost no one in crypto or legacy will really have to worry so much about liquidity if they make smart choices so that they can get in and out of fewer positions. Now let's dig into the crypto side of this a bit. I think there's a couple of things to think about. One is when you're taking positions in only a handful of altcoins, if that's your method of increasing your Bitcoin, or even more, fewer than a handful, it may be 1 or 2 altcoins. It may be harder to get in and out. However, there's a sweet spot in terms of the size of the market cap and the overall volume that's going to be relative to the size of your portfolio and your ability to get in and out of that coin. But it's important to know whether or not there's enough liquidity in the coin for you to trade in and out of it. And for most people, a lot of coins will qualify to be able to do that. Next is to consider what market cap is going to allow you the greatest chance of outperforming a basket or whatever. And with the really large caps, it's going to be harder to outperform altcoin indexes because those large caps do weigh down a significant percentage of it. So if you're just long Ethereum, well, the market cap or the altcoin index as a whole is probably going to be pretty similar return wise to Ethereum. However, if there are smaller tokens with, say, 100 million or lower market cap, you may be able to significantly outperform the broader altcoin index, theoretical index, unless you're investing in a basket. But you'll be able to better outperform a basket, or you're wrong. So it can be more volatile, or you can lose. You could not be correct in your analysis. You're taking a bet on yourself when you're doing any kind of concentrated portfolio. But my point is these things can really stack up in your favor if your aim is to outperform the crypto markets. I actually think it's a little harder in the legacy markets and the stock market to successfully outperform the market by stock picking. Very few people actually do it. But in the crypto landscape, there's a lot more inefficiencies, and it's more asymmetric knowledge-wise in terms of the people investing. So if you do have the capacity to find winners, whether you're looking at them technically or fundamentally, then I think you can actually really increase your chances of outperforming the market with a concentrated portfolio. The next thing that I think is an advantage of a concentrated portfolio, and we're still talking about trading altcoins here relative to Bitcoin, so we're trying to increase our Bitcoin, is that with fewer positions, your ability to get in and out in some ways is simpler. So you may have to have deeper liquidity and find the tokens that they have the upside, but they also have sufficient liquidity for you to get in and out. You don't necessarily have to get in and out all at once, but you may want to be able to work an order book over a number of minutes or hours or days, whatever you're comfortable with, so that over time you can get in or out of your position without too much slippage. That's different than having no liquidity and your order size is greater than the total daily trading volume of that coin. That doesn't fit into the sweet spot. So you have to consider that. However, if you've picked tokens that have sufficient liquidity for your position sizing, then the next thing is, if you have fewer tokens to get in or out of at any one time, if you change your sentiment on the market and you decide you need to be out, it's easier to sell 2, 3, 4 altcoins than it is to sell, say, 10 or 15 or 20 or 40. And now you can actually make more rapid adjustments to the market as trading conditions change, and you don't necessarily just have to eat a giant drawdown because you just simply don't have time to exit the market against all these different assets that you're invested in. So I think that you really have the potential to outperform the market if you're trading far fewer assets in crypto. And this is something that I've run into, and it's been problematic for me before, where I wanted to kind of separate my my exposure so that I had because I had interest in something, or had some reason or another why I liked different tokens or different setups. But when you're just picking a couple, then your ability to turn those into real returns is much better. Now, if you're looking at a large basket, you may get the 5% return on one and a 40% return on the other, and you get a blend of something in the middle. But you would have gotten that with a broad basket investment in the first place. If you're concentrated, you may not get the large return. You may have picked wrong and only gotten the smaller percentage return. But when you hit the bigger ones, then you're really compounding that. And if you hit multiple in a row, then it starts to make a significant difference. And I think, though you're taking a little more of a lost potential risk by not spreading it out, if you believe the whole market is relatively healthy, in the long run, I think that a good trader or a good person selecting what to invest in from a technical and fundamental setup, preferably when those combine to make the right one to dive into, they can outperform other traders, or just not paying attention and buying a couple of large caps or something like that. So I think that's really something to consider when you're looking at trading altcoins and you're considering diversification versus concentration. I think there's a strong argument for concentration and taking bigger bets and accounting for the liquidity and other things, but really going for it with the choices that you make to give yourself an opportunity at outsized returns. And then especially if you hit some of those early, then you can compound those into your next bets, and that's what's really going to help you stack up. All right, that's all I got for today. I hope that's informative or helps. Let me know what you think. Hit subscribe and like and all that stuff if you enjoyed this, and we'll talk to you next time.